While the markets were sleeping, this exchange just posted 291% profit growth and now ranks as the world's largest commodity options exchange. And the charts are showing a powerful institutional breakout. Let's break it down. MCX is India's largest commodity derivatives exchange, a financial marketplace where traders buy and sell futures and options on gold, silver, crude oil, natural gas, and base metals. Every trade means more transaction fee, more volume means exponential profit. It's an asset light, beautifully scalable business. The quarter 4 financial year 2026 result just dropped and the PAT stands at 530 crore or 291% year on year growth, and the EBITDA margin is at 76%, a fortress level profitability. The average daily turnover for both futures and options market is very high. The three things that are driving this growth are as follows. Firstly, we can see that in the bullion segment exploded with gold and silver futures surging 496% year on year because of the global volatility and the Indian retail hedging demand. Secondly, the options volume jumping 109%, making MCX now the world's largest commodity options exchange. This is a high margin business. Thirdly, we can see that the traded client segment grew by a percentage of 60 to 20.90 lakhs. The SEBI opened the gates for retail derivatives, and Indian market traders are now pouring in. The stock surged 13% in recent weeks. That move was a fundamentally justified move. Now I'll be giving the technical analysis. Here's the setup in one line. The current price is around 3,180 and pull back to 2,950 to 3,000 is what I am looking for. Now looking at the technical analysis, when you look at the monthly chart, there's a 15x rally from the levels of 200 to 3,180. Long term bull market, clean uptrend structure. This is institutional connection and not just retail speculation. When you look at the weekly chart, it rallied from 2,400 in the month of January to 3,180 in May with 8.4 million. That is banks money loading up and not just retail FOMO. When you look at the daily chart, this is where the trade lives, and you can see high volume candles in the month of May. And now I'll be defining the key level. The strong support is around 2,950 to 3,000. That is the current consolidation zone and the natural pullback area after a breakout. When price pulls back here, smart money might reload. The second support is around 2,700 to 2,800. The price bounded here, and then we can see the current rally. The current resistance is around 3,180. That is where we are, because it's in the all-time high zone. We cannot completely define the resistance region. And the daily RSI is 76.8. We can see it is overbought, however it is not overheated. It is a connection based momentum. Now I will be giving my GTT based on this logic. I will be buying the stock at 3,000. I'm waiting for a pullback confirmation. So I'll be buying it at 3,000, and I'll be placing my stop loss and target price using OCO. So my stop loss would be around 2,700 below the support zone, and my target price would be around 3,350. That is the next resistance zone on the chart. As you can see, 3,000. 350. So I have set my stop loss and target price, and that gives me a risk reward ratio of around greater than 1 is to 2, that is around 1 is to 2.4, which is ideal for swing trade. So I have set up my plan, and the plan will execute itself. I am not emotionally involved in this. This is a pure rule based execution. I'm not chasing for the momentum, I'm waiting for the trade to come to me. So, here's the real question for all the viewers. Now that MCX is world's largest commodity options exchange with 291% profit growth, is there more room to run at these levels, or is it already priced in the market? Drop your views in the comment section. I advise you to please do your own research and then trade safely. Like and subscribe for more such breakdowns. Thank you.